I've got about 3 more decades left in me, and then I'm going to hang up my cleats. Time is up for this economy. And what do I mean by that? Whether you're talking about the stock market or real estate or any aspect of the economy, debt levels, interest rates, it's all coming together. It's all running out of time. I want to explain exactly what I mean by every stage of this process as we go. As well, at the end of this video, there's a big announcement I need to make about the Peter Leeds newsletter and the Peter Leeds army. And really, a lot of things are going in a bad direction, getting a little bit worse, and I'm going to show you what happens when they go in that bad direction. And I don't mean to scare you. Of course, there's always opportunities. In fact, there's more, better opportunities in a time of chaos or commotion like this. More millionaires were made during the Great Depression than any other time in history up till that point. So we'll keep telling you about all these opportunities, but in the meantime, we have to ask ourselves about time running out for this economy. I told you that when the Federal Reserve starts lowering rates, in or around that time is when the recession will begin. Technically, we had a recession there and there, but then decided to change the definition, say, oh no, that's not what a recession is anymore. Even though I'm 50 years old, and that's what they said for 48 years of my life. Plus, as I told you, there's a rolling recession that's been passing through town this entire time, one section of the economy at a time. But fret not, when this proper recession gets here in full force, it will be unmistakable. And I don't mean to scare you. If you're scared, that's probably good, but it'll encourage you to take action because there's actions you should be taking. But I'm not trying to scare you. I'm trying to set you up and help you benefit from massive opportunities that are about to start showing up. The reality is, if I'm right about even a portion of the things I'm talking about, you're probably going to want to be prepared, benefit, help the people you care about. Some of the ways to do that is to turn a few $100s into a few thousand by maybe, joining the Peter Leeds newsletter. Time's up for the precious metals mining stocks to not be reacting to the reality of the environment they're in. Both silver and gold, for different reasons, are each underneath a supply constraint right now. In China, gold is being vacuumed up. 4 times the regular retail buying. The country itself, the bank is buying more and more gold. They're mining more and more gold. All the gold is going out to the east, to China, to Iran, to Russia, to India. And silver is about 200 to 400 million ounces per year undersupplied. Every year there's a lot more silver being used up or demanded than being produced or dug up out of the ground by hundreds of millions of ounces every single year. When all these realities get noticed and they start helping the fuel and spike more competitive demand, that's going to cause precious metals prices to go up even higher because of the frenzy of demand. But it won't be a spike. It won't be a jump dramatically higher. It will be a slow, measured, manageable build or growth over time. It will be a very boring path on the way up to 3 or 4 times the value of the asset now. And this is good though. This is what you want because, as I always tell you, the faster something rises, the faster it comes back down. You want silver and gold and all precious metals to have a slow, measurable, manageable build over time. You just get a little bit wealthier each day. It's not going to turn you into a millionaire overnight. Time's up in terms of waiting for this commodity super cycle to start. It has begun. We're just in the very beginning of a massive commodity super cycle that's going to take at least 10 years, probably about 15 years of just commodity prices growing over time. The demands are finally being recognized, but the downside of this, of course, is that it's going to make products that you buy cost more. It's going to stoke inflation. But as the commodity super cycle continues on its path and gets even more noticeable in the media, then people will think, maybe I should be buying some of these companies that benefit from the rise in the price of gold. Maybe I should do what Peter Leeds subscribers did years and years ago. And they'd be right. Time's up for these bizarrely overvalued stock markets. This is the Buffett Indicator, basically the ratio of corporate equities compared to the GDP. It makes no sense for the GDP to ever be greater than the value of the corporate equities that made up that GDP. The current reading is 204.7%. The danger zone is anything over 100%, but it's up 20% from the previous quarter. Ideally, that number on the Buffett Indicator will be 0. The lower the better. But when the stock market finally starts acting appropriately, realistically, reasonably, more in line with historical precedents, it could get set off by any one of a number of things. such as some of this deteriorating economic data we've been seeing lately, or just a basic consumer breakdown. So much of the corporations and the companies operating in America are based on consumers. The consumers are really taxed right now, and they could all just revolt. They could stop going out to eat dinner. They could stop buying expensive things. When they clam up, the economy clams up. They are the economy. Maybe it'll get set off by all this unrented office space. Those buildings need to rent out the offices to pay the mortgages on the buildings themselves, which are going to be owed to the other counterparty, the bank that owns the mortgage. That's why everyone's saying there's going to be a big banking crisis. There's a lot of office buildings which are going to be possibly defaulting, going bankrupt, having to sell assets, shut down. Maybe the stock market comes down when it gets set off by just a general Minsky moment. Or even what is coming is the recession. When the recession gets here, is that going to set off a downdraft in the stock market? And of course, there's always war, military conflicts, which are on the rise right now. Anything could cause the stock market to stop acting irrationally. A lot of the setups right now are exactly the same as they were in 1929, right before the big stock market crash, which is the purpose of the video I showed you about whether or not it's coming back. All the similarities between that time and this time. Similarities like hubris among the investors, just opposition against any negative voices or any dissenting voices, or market leadership among a very small group of stocks rather than the overall broader market. Like, I don't know, the Magnificent Seven, that comes to mind. It's important to remember about that, the crash in 1929. It had begun and had been going on for several months before anyone realized that they were in a big stock market crash. Let that sink in for a minute. And don't act like we're so different than people then. We just have color TV. Not a lot of time left before the US dollar starts declining. Keep in mind that, and I know that the four most dangerous words in the stock market are this time is different, but here is why it is different. We're actually in uncharted waters with the US dollar. For the first time, we are losing a little bit of the reserve currency status, a little bit more each day, very slowly, a little bit more each day. And for the first time ever, a reasonable competitor to the reserve currency, that being the new BRICS currency, which is backed by gold. Gold is actual money, dollars are currency, not the same thing. A currency backed by gold instantly is the preeminent currency in the world. This is at a time when a lot of the countries that are going to be using the BRICS currency are some of the newest BRICS members. Ethiopia, Saudi Arabia, notably because they can dictate what currency or what money oil is traded in. Egypt and Argentina, Iran, and the United Arab Emirates are now becoming part of the BRICS nations. And then they're not going to stop there. They're going to bring more and more people, more and more populations into the usage of the BRICS currency. And this is at a time when we are threatening financial sanctions against China, which of course drives them into the arms of Russia and Iran. You guys feel or see how it's sort of like a buffalo stance happening now? There's North Korea. The battle lines are being drawn. So with a weaker US dollar, exports will bring in more money. If you sell something that you make in America to another country, you get more financial reward comparatively for it because the dollar is less expensive, meaning their dollar or their currency is more expensive. So exporters do well, importers do very poorly because everything they're importing costs more, whether it's coffee beans or pork bellies or a kid's swimming pool. And of course, precious metals prices soar, all commodity prices soar. Foreign nations that own or owe US dollar denominated debt, they'll be able to pay down those debts a lot more easily. If the US dollar gets weaker, it's not as difficult to pay off those US dollars comparatively. And I forgot something on the last video. It didn't make it out the final production. This is a chart of the 5 countries which most of the US debt is owed to, and I wanted to show you how you can see this is where it was previously, and then now here's where it is. And there's a lot less US treasuries being owned by our 2 top financiers, China and Japan. That decline right there is showing you the results of the relatively recent shift among our top 2 creditors. They're not buying more treasuries. They're selling some of the treasuries they do have. They're just lightening the load. And if they do that really quickly, that's what I'm talking about when I say that China could weaponize it. They could drive down prices of U.S. bonds by just unloading all their treasuries, spiking interest rates. They can do all that kind of stuff. They're not going to, so stop talking about it. What's happening is that China and Japan both are having their own domestic issues, economically, financially. China especially, they're having a massive real estate breakdown. Stock market's doing poorly. Their currency is doing poorly. Their interest rates are too low. Japan is in the same boat also, with the interest rates, I mean. Their economies are just in a whole heap of trouble right now. They're not thinking about taking on more debt in U.S. treasuries. And I also always tell you that it's about the speed of the reduction, not the final destination. If something is decreasing in value, that's bad, but if it's going steeply decreasing in value, that's very different than if it's gradually getting there. Now that you don't need to trade oil in US dollars anymore, there's a lot less need for nations to hold a lot of US dollars. And there's political tensions escalating in some of these countries and plenty of domestic problems too. There will just be less demand for the US dollars from our top two financiers and many other countries as well for a long time now. Super cycle, 15 years. When the recession does get here, people will need to raise money. There will be margin calls. They'll have to find ways to pay for their bills. Some other people will think about selling cryptocurrencies. Even if they believe heavily in cryptocurrencies and expect them to go up in price a lot, they won't be immune from any kind of sell-off on a wider basis. A lot of money will move from risk-on to risk-off assets. People will start losing their jobs. But let me just say that anyone who gets blindsided or surprised by this is going to get what they're going to get. You guys have known about all of this coming up for years. You've known it's coming, you've seen it, you've watched it build up, and I already told you too what's going to happen next, and it's just going to be ugly. But anyone who doesn't recognize what's going on just isn't looking, or they don't understand what they're looking at or how to look at what they have to see. But it's clearly obvious to me how everything's playing out. For example, the Buffett Indicator would need to do something that it's never done ever in the history of time to be that high and then not result in a massive, aggressive stock market drawdown, a sudden violent recalibration to appropriate levels. I've been looking for a good chart like this for a while, so you guys are going to get the benefit of my quest. Here's a chart for visual capitalist of home prices compared to personal incomes. And the current ratio is 5.8. That means that you would have to work for almost 6 years, never spend a penny on anything, just put it towards a house. And then if you pull that off, you can actually afford a house. This is an unsustainable trend. It's a nonsensical trend. It's illogical. Home prices cannot stay this high in this current economic environment. So does it correct tomorrow? Does it correct 5 years from now? You can't know when. You can just know the trajectory. It's a lot easier just when I tell you about stocks. You don't need to understand how to invest well in stocks. Invest well in companies. If you understand a company, it's easy to pick the right kinds of stocks. Same thing if you understand the economy. You can understand that there's not enough money for people to be buying houses at this price. They're not getting paid enough. Eventually, that unsustainable trend, and it's about the speed, the angle, the slope of the trend, not the destination. It's too fast, too quickly. Therefore, it's going to start coming down. It's going to take a little bit of pressure off the prices of a lot of these homes. And time is up for the rest of the world ignoring the warnings that you hear about from me, that you know about. They're finally catching up to where you are, that you've been for a while. But do you remember what it was like when you first heard about the situation that we're in? It wasn't good. A lot of these people are getting blindsided, and they're just finding out this negative information now. You have a benefit because you've been listening this whole time and watching it build. A lot of people are just going to find out about it, and in all of this chaos, there's going to be a lot of opportunities. Just like when I talked about Sirius satellite radio, that's a massive opportunity in my opinion, besides my deep internal obsession and need for everybody to like me. I'm working on it. But besides that, a lot of what I do is for you guys. And I know it helps you because I hear it helps you. You tell me how it helps. You guys have been sending in some of the most incredible messages and emails recently. I stopped putting testimonials on the website years and years ago. You can check them out on peterleeds.com if you want to read them, but it's great to get new comments like this as well. And we've been doing exactly this since 1996. So we're almost up to the end of our third decade. I've got about 3 more decades left in me, and then I'm going to hang up my cleats. There's going to be a major change for the peterleeds.com newsletter. Not for the newsletter as much as for the Peter Leeds Army. I don't like the moniker of Army, so I'm changing it. It's going to be the Peter Leeds Insider. Become a Peter Leeds Insider. And that's how you show your support, and you get direct contact with me by email. Ask me anything you want, whenever you want. Plus, you get the exclusive newsletter that I talk about things every month. That's not to be confused with the peterleeds.com newsletter where we make stock picks. That's $1.99 a year.